Senator Cotton.
Thank you, and thank you, gentlemen, for your appearance today. I want to continue on a line of questioning that Senator Warner began. So putting aside Bitcoin or other kinds of cryptocurrencies that are based on blockchain or distributed ledger technology, what are your thoughts on the potential value of that underlying technology of blockchain and distributive ledger technology, both to enterprises and consumers and perhaps to government agencies?
It's important to remember that if there were no Bitcoin, there would be no distributed ledger technology. It grew out of that technology initiative. And the potential applications, and by the way, I'm no pie-in-the-sky dreamer. I just report what I read, but the applications range from enormous potential in financial services industry and the banking industry, but right down to the way charity dollars are spent, the way perhaps refugees are accounted for across the globe. There was an article just this morning about the use of distributed ledger technology for 2.5 billion people around the world who don't have access to banking services. One of the areas that, in our own area of agriculture futures, 66 million tons of American soybeans were just handled through a blockchain transaction by the Dreyfus Company for sale to China. So Bitcoin is now being used. It's used in our American transportation and logistics system. And most importantly, the potential of distributed ledger technology for regulators to be able to do really close market surveillance. And if it had been available in 2008, if we had been able to see the counterparty credit exposure of one bank to another bank in real time with precision, that would have enabled much more precise policy choices that had to be made in a rush without good data. So I think distributed ledger technology has got an enormous potential. Now, how it will be realized, when it will be realized, what are the other challenges in it, those we can't say, but the potential seems extraordinary.
Thank you. Mr. Clayton?
I agree that the potential seems very significant. And just look around anywhere in our economy where verification and record keeping has cost that is potentially reduced is an opportunity for this technology. That's just one of them, and I hope people pursue it vigorously.
Thank you. Let's turn our attention now to cryptocurrency and to Bitcoin, since it's the most prominent. Yesterday, the Dow Jones had its single largest decline in a point scale, 4.6% as a percent, which is high, not the highest ever. That obviously generated a lot of news coverage. The dollar has faced 2% inflation or less now for many years. Bitcoin, however, has seen a 32,000% increase in its value over the last 5 years. It's declined by some 60%, I think, in just the last 30 days. What are the factors driving that kind of extreme price volatility in Bitcoin relative to securities of public traded companies or the U.S. dollar?
Well, just recently, the volatility we've seen in Bitcoin was not as large as volatility we've seen in some other asset classes, such as the VIX product, which is known as the fear index, a volatility gauge. And so we have seen extraordinary volatility in Bitcoin, but in our world, in commodity derivatives, we're used to volatility in asset classes, and that's one of the things that the emergence of a futures product is meant to do, is to provide those who are exposed to that volatility a means of hedging and mitigating the risk to that volatility.
Mr. Clayton.
I don't really know what's driving the volatility in Bitcoin and cryptocurrencies. They're not correlated with sovereign currencies, so it must be something different from what would drive the dollar. But that's one of the issues before us, is there does appear to be a lot of volatility compared to the medium they are supposed to be a substitute for.
So what does that kind of volatility portend for cryptocurrency's future as a potential alternative to legal tender of nation states, or in the EU's case, a transnational organization?
You raise a great point. Now, maybe that volatility tamps down to a stable, but an asset that is highly volatile is not a very effective means of exchange, because you don't know how much you're getting by the time you receive it or how much you're paying at the time you have to pay it. If you agree a price on day 1 but have to source it on day 10, you expose yourself to significant risk.
Thank you. My time has expired. I do want to associate myself with the remarks of Senator Donnelly at the end of his remarks about the risks that cryptocurrencies are currently posing as a way for rogue nations, terrorist organizations, criminal organizations to evade sanctions, not just in trading, but in hacking as well, as we've seen media reports from North Korea. So I'm glad to hear that you are working closely with our law enforcement and intelligence agencies, and I hope that continues. Thank you.